afternoon, Fabian Onetti for Winston Capital Advisors, and we start with the week of December 2 to December 6, which in reality started a little bit earlier. We had a very big Black Friday, followed by Cyber Monday. The first release that we have is the very big blockbusters. Amazon commented it was the best Black Friday ever, and although we still don't have quite numbers of Black Friday, or at least not official, for instance, for Cyber Monday, they're thinking that it's 20% more than last year. So remember, one thing is also an element that online sales are growing at a very fast pace as a percentage of total sales. Remember, this is just not an Amazon phenomenon. You have names like Target, Walmart, Nordstrom, many big retailers that have really been able to catch up into the online, offline mode of sales. So that was very positive, and clearly the market is looking very attentive at the results of the Christmas sales for this year. One second.
Okay, sorry about that. So positive in that sense that we have a very good start for now of the holiday season, which will be the thing that the market looks at the most for the end of the year, and how we're going to close this. So far, very spectacular return on the equity markets worldwide, just not in the United States. As you know, what is happening on the holiday shopping, apparently 74% of adults say that they're going to buy some technological gadget for the holidays, and the number one issue is headphones and earbuds. The number two is portable wireless speakers. Number three is smartphone. Number four is TV. So it looks like all these big sellers, especially headphone earbuds, there are many brands, but then you have the Apple earbuds, and then on telephones, portable speakers, many brands, and then on smartphone you have Apple, Samsung. So see who are the winners there for the story. The market, which had a great super surprise on Friday, we're going to talk about that in a minute, was rocked a little bit. We lost almost 600 points between Tuesday and Wednesday, when President Trump says, well, we might wait for the China thing until after next year elections. And remember, our view here in Winston is that the market had priced in already like a phase one type deal, when some agreements, no one knows very clear what type of agreements, but sort of a phase one, some building blocks for a bigger agreement, and the commitment to keep working, and more than anything, the commitment not to raise a new tariff on anything else. Remember, December 15 is when the new tariffs should kick in. If we don't have a deal, we'll see what happens there. But the market clearly lost 600 points on that. But then mainly from China, which is very quiet and very modest about the whole thing, they say that that's not what we see it. Conversations are progressing. We're doing good advances. We're moving into the right direction. So the market got a better of a story at the end. Sundar Pichai becomes the whole CEO of Alphabet, the parent company of Google. He was just the CEO of Google. Now he's the parent of the holding company who owns things like Waymo and other digital enterprises and initiatives of the company. And the both founders, Larry Page and Sergey Brin, will sort of retire and be big shareholders and maybe think the big picture a la Bill Gates. I think it's positive. Most of the reviews in opinions in the market for this announcement are very positive for the performance of the stock. We like it, we own it, it's in a fresh money buy, we think it's positive. We have a great presentation on Wednesday about Jay Pelosky from Tripolar World Investment Management, a good thesis, a good story. I'm not going to spend time here, but you can find it in our archives. We're going to publish it. I think it's a very good, it's kind of long, but it's a very good analysis on what his firm thinks for 2020, and a little bit of also what we think in Winston, because we did like a ping pong in terms of ideas and asset classes and sectors and industries and countries, where to allocate your funds for 2020. So interesting for that side. Japan announced a big fiscal stimulus, $120 billion, which was approved by the Fed very quickly. And remember, we have Christine Lagarde for the Europeans asking their governments to increase their fiscal spending, because they say we have done as much as we can from the monetary thing, and we're not there yet on the economic recovery. As a matter of fact, Germany had a very lousy industrial production, negative 5.6% for November. The market was expecting negative 3.4%. So we still kind of not there. The market had priced in that we did have a scare in 2019 of a probably global recession. We're out of the goods. We're going to have a nice and slow recovery in 2020. However, many central banks, the World Bank, the IMF, and other big institutions are still cautious about global recovery, especially on the trade front. If we keep, having these, disputes between China, the US and Europe, etc., etc. So we'll see what's the story there. And finally, on Friday, we had this amazing surprise labor report. The market was expecting between 170 and 185,000. The highest was at 210. The number came at 266,000 new jobs. Also, they reviewed the last 2 months, hired $40,000 each, an unbelievable number for the American economy. And needless to say, the market had a huge 340 points rally. We like it. Clearly, from the U.S. point of view, we have passed the fears, and the economy is growing again. And remember, we do have a lot of indicators. We have the ISM, Purchasing Managers Index, industrial production, retail sales. In general, the story and the history has been that the job creation is the best indicator of a level of activity. So very good numbers there. The market reacted accordingly. That's very good. Also, then on the close of the week, the OPEC agreed to do 500,000 of cuts in oil production, thinking that next year the world economy is going to be okay, maybe a little bit softer. But on the other hand, the non-OPEC members plan to add 2 million barrels a day, 1 million by the U.S. shale oil revolution, 500,000 from Canada, 500,000 for Brazil. So we'll see what happens with the price of oil if the OPEC only cuts 500,000 and someone is adding 2 million. What's going to happen? It all will depend on the level of economic activity. If the world, bounces back and we get into some degree of decent growth, it's going to be good. Otherwise, we might see much lower oil prices. Finally, what's coming this week? We have a meeting of the Fed Tuesday and Wednesday. No one is expecting any change in rates, but like always, we will be looking at the memo and the comments of what are they saying. On Friday, we will have retail sales. The last time were bad, and that was one of the indicators that the economy in Q4 cannot grow as much. So the market will be looking at retail sales on Friday. And then we in Winston will be transitioning to Zoom as our system to transmit our morning calls and our videos. Zoom is an application. We will send it to you. It's free. You have to download it on your computer, on your laptop, or your phone. And basically, it will be all in one. It will be a message system like we use WhatsApp. It will be a video like we use YouTube. And it will be a phone call like we use Uber Conference. So the three will be in one. We will phase out the other systems during next week and phase in Zoom. We'll instruct everybody how to do it the right way. That was all, like always, for our subscribers. Every day, 8:45 a.m. from New York, live transmitting on the markets. You can get more information in our page, winston.capital. Have a great week.